So maybe I should ask in this video instead of my first one, which I probably should have asked since that was the first one I did with this new microphone against the Rode NT2-A. It's not hooked up to the pre-processor, just like the last video was not either. But I did a little test, testing 1, 2, 3, 4, 5, and then I went to my old mic, which is a USB blue, Yeti, whatever, blue, and did the same thing, testing 1, 2, 3, and I can hear the difference. But you know how when you hear your own voice, you wonder, do I sound more idiotic? Does my voice sound better or worse? That stupid thing you never can figure out. You got to ask other people, how do I sound? So I guess what I'm asking you is, if you don't mind, and just how do I sound? Does it sound good? Sound better than the other mic as far as you can tell? More crisp, more clear, whatever. Again, there might be a little bit of background noise, possibly. That's because the pre-processor is not hooked up. It had a problem. I'm sending it back. I got a new one coming. And I'll get that baby hooked up, which might be a good thing, because then when the wife's in there dropping dishes in the sink, ding, 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 ding. Oh, Evelyn, go ahead, continue. They can't even hear that. That'd be great, wouldn't it? Love it. That's the point of having, well, one of the points of having a preprocessor. You can really cut out noise, like, nicely. So, let's get on with some goodies, some good stuff. Oreo good stuff. Who do you think you are? Wolf Street. Don Quejones. Speaking of contagion. No, I'm not talking about disease. I'm talking about, well, maybe it is kind of a disease. Banking. It's kind of a disease. The banksters, their banks, too big to fail. That's kind of a disease. You suffer? Do you suffer from too big to fail? Ask your doctor if too big to fail is right for you. Symptoms may include insolvent banks, bankruptcy filings, bail-ins, bailouts. Again, ask your doctor if too big to fail is right for you. So we're talking about the Spanish and Italian bank. They're the ones in the spotlight right now. There's other ones, believe me. Oh, there's other ones, but these are the ones in the spotlight. Banco Popular failed, sold off for $1 to Santander. Then Liberbank starts shares massive falling off. All of a sudden, a regulator comes out. No short sales, no short selling of this bank stock. And by the way, they said, by the way, it has higher, exceeds expectations, exceeds these numbers of deposits, and exceeds these, and exceeds the ratings. And then why are people dumping the share? Why are you standing out here saying we can't short sell it if everything's fine, right? Again, why? Here's why. At first, deny, then taxpayers get to bail out the bondholders. Fear of contagion feeds the Italian banking crisis. So now, take the spotlight off of Spain just for a moment. Believe me, it's just for a moment. Put it over back on the Italy. It kind of bounces back and forth. Now it's back on Italy. Italy's turn. Eeny, meeny, miny, mo. Catch a too big to fail bank by its toe. Spain's Banco Popular had the dubious honor of being the first financial institution to be resolved under the EU's Bank Recovery and Resolution Directive, passed in January 2016. As a result, shareholders and subordinate bondholders were bailed in before the bank was sold to Santander for the pricely sum of €1. Again, what could you get for $1? $1. The dollar store. I'd like to buy this entire bank. Go to the dollar store. By the way, speaking of dollar store, you know how retail apocalypse? The dollar store is opening up new branches left and right. Why? Because more people are becoming poor. And where do poor people have to go to buy stuff? Wherever it's cheap as possible. A little tip there from Jason at 4 for you. As if you didn't need to, didn't already know that. At first, the operation was proclaimed a roaring success. As European banking crises go, this was an orderly one, reported The Economist. The Economist magazine. Taxpayers were not left on the hook, as long as you ignore the €5 billion euros of deferred tax credits Santander obtained from the operation. Deferred tax credits, so taxes they would owe, don't worry about it. Depositors and senior bondholders were spared any of the fallout. But again, if the crisis is too great and the bail-in needs to be huge, they won't be spared necessarily. That's the key, which, for this time, I guess they got by with the skin of their teeth. But it may not last for long, for the chances of a similar approach being adopted to Italy's banking crisis appear to be razor slim. The ECB has already awarded Italy's Monte dei Paschi a last-minute reprieve on the grounds that while it did not pass certain parts of the ECB's last stress test, the bank is perfectly solvent, albeit with serious liquidity problems. By contrast, Popular was also liquidity challenged, but unlike Monte dei Paschi, it passed all parts of the ECB's 2016 stress test, which shows you how ineffectual these stress tests actually are and how subjective the resolution process of a European bank can be. Kind of reminds me of like these commission, the 9/11 Commission, the Warren Commission. The bank, they always have a commission that's designed to absolutely fail and give you nothing. But it makes you think, oh, they're going to go after these guys. They're going to find out who did this. And nothing happens. We're going to have stress tests. Yeah, we'll stress test these banks, and we're going to show you that these guys are solvent. See, look, the stress test came out and told you that. And then they're insolvent and they fail. Interesting. In a speech to the Italian Banking Association on Thursday, the vice president of the ECB, Vitor Constancio, suggested that under certain circumstances it might be wiser to save a bank than to resolve it. What's more, taxpayers should be called upon not only to save banks like Monte dei Paschi, but also to make whole all holders of the bank's subordinate debt, under the pretext that they were misled into purchasing them, as indeed some retail customers, but certainly not all, were. A taxpayer-funded bailout of bondholders is also on the cards for the two mid-sized Veneto-based banks, Banco Popular di Vicenza and Veneto Banca, which have already received billions of euros in taxpayer assistance, by the way. Italy's Minister of Economy, Pier Carlo Padoan, continues to insist the two banks will not be wound down. This is the same man who insisted last year that A, there would be no need of any future bailouts, and B, Italy did not even have a banking problem on its hands. Inconceivable, said the Sicilian. Padoan has no choice but to deny all rumors of a bail-in. Otherwise, there would be a massive rush for the exits. In the weeks and even days leading up to Popular's collapse, Spain's economic minister, Luis de Guindos, repeatedly reassured investors that the bank was perfectly safe and solvent. All the while, government agencies, including Spain's Social Security Fund and regional government authorities, were emptying the deposits they held with the bank as fast as they could. Let me read that one more time. All the while he's saying everything's fine, it's not solvent, everything's good, the government agencies, including Spain's Social Security Fund and regional government authorities, were emptying the deposits that they held with the bank as fast as they could. The total is unknown, but it certainly ran into the billions of euros. So, this is the equivalent. Goldman, Vampire, Squid, Sachs. Tell our clients, give out the newsletters, get into the mortgage industry. Well, again, we're going to get into housing and everything's going to be great. As soon as those letters go out, guys, short that living effing hell out of the housing market. Copy that, boss. But, boss, you told the clients to do the opposite. I know. We're going to crush them. So this is the same thing. Government, Spain's economy minister, government comes out and says, the bank is fine, it's solvent, you have nothing to worry about. Behind the guy, who's a government official, is more government officials running to the bank and taking out everything they possibly can. Do as I say, not as I do. Which is why, when it comes to assets and stuff, if you don't hold it in your possession, you don't own it. Which, technically speaking, means your deposits in your bank. But what do you do when you're a company and you got all this money you have to have in the bank, daily transaction, weekly, monthly transactions? We need $1 million just to do our transaction, just to do what we do. Yeah, hopefully a bank problem doesn't come to your bank, but it kind of seems like it's just a matter of time before it's there. Why? Because banks are insolvent from the very day they open their doors up, because they've got all those deposits and then they loan 90% of them out, so to speak, lend out 9 times the value of them, new loans or whatever. They take your loans. You had $1 million in there. They leave you with 10,000 or 100,000 in there. They've lent out the other 900,000. That's usually what happens. You put $1 million in there. They've lent out 900,000 of your million, leaving 100,000, right? Well, 9-to-1 ratio, whatever. And then who they lent that out to had a bad rainy day because the policies the Federal Reserve was doing, crushing the middle class, crushing the poor even more, less spending, their business didn't survive, etc. But they're not telling you that. They're not telling you that we just lost your money, because it's all pulled together, and it's just simply, are we in the black or in the red? So that's why I have my precious metals and stuff. Yeah, you got to have money in the bank. If I want to get a house and somehow get a mortgage, not pay it off, like I'm thinking I could do with these Bitcoins and cryptos. And that's the thing. If I can pull this off, like, let me just say this. If in the next 2 months, Veritasium goes crazy, like I think it may, it very well may. Like, oh my God, it's 3-to-1. Oh my God, it's 2-to-1. Oh my God, is it 1-to-1 with Ethereum? Oh my God. One of those kind of moments. Even if it's 3-to-1 or 4-to-1 and I get out, I will have more than enough money to put a nice down payment on a house. The problem is you got to put it in a savings account or checking account and let it sit there untouched for 60 days. So the underwriter, loan, whatever, will see that and say, okay, you're now finally fully approved. Go ahead and let's set a closing date after, like on the 65th day. So I've been thinking about this, thinking, if by chance the old dream house I was telling you about doesn't sell, and they sure as hell didn't take our lowball offer, but these Bitcoins and stuff go crazy, which in this case, Veritasium, what the hell? Why not just put a large down payment? Because anything in Florida, well, I forget what the number is, but there's FHA loans, there's conventional loans, and then there's like what do they call it? A jumbo loan or something, and you have to come up with 5 or 10%. But one way or the other, I'm just thinking if I can put a nice down payment down, I'll cover whatever I need to cover. Hell, we may still go for that house if it's still available. Just because it's the freaking house. It's the one, if I can pull it off. So that's what my new thing is. Veritasium, please go crazy. Let me sell out, flip that, boom. Which I do have a partner on that one I've had for a long time, from like 2 years ago. So I'll have to give him his cut, of course. But I'd like to take that, put a huge down payment, get into the new pad, start doing my videos. Guys, if I may, can I show you this house we just got? Thank you, Cliff High. Thank you, Webbot Reports. And most importantly, whoever the hell was out there buying Veritasium at 3-to-1, 2-to-1, whatever the hell it went to when I sold out. Thank you guys even the most. And of course, my subscribers who watch all my videos and listen to the crap that I speak about every freaking day, like this. This is not something anybody should be talking about. This should not be an issue. This should not be happening. And it's happening. And it's contagious. It's contagion, as they call it. This bank, and that bank, and that bank, and this one goes there. And Italy, spotlight on Italy, now Italy's in trouble. I mean, my goodness. So let me continue this and finish this. To avoid a similar fate, Banco Popular di Vicenza and Veneto Banca were instructed by the European Commission last week to find an additional 1.25 billion in private capital. That money still has not arrived, by the way. And now Italy's government is trying to persuade the European Commission and the ECB to water down the requirement to maybe 600 to 800 million, if you don't mind, while also urging Italian banks to chip in to the Bank Rescue Fund. If they don't, and the two Veneto-based banks end up being wound down, they will have to cough up as much as 11 billion euros to refund the bank's depositors. If the money is found in time, another bailout will proceed with the ECB's full blessing. But there's not supposed to be a bailout. We're supposed to do bail-ins, right? Over there. But they're talking bailout. What is this? If the money is found in time, another bailout will proceed with the ECB's full blessing. As Constantio reassured Italy's senior bankers, the ECB's rules on bank resolution allow for precautionary recapitalization of banks by the public sector in cases of significant financial stability concerns. We have to bear in mind that it is not only direct public support for banks that has a cost for taxpayers, but also financial instability. Indeed, the costs of the latter may, in some circumstances, be higher, he said, invoking unpleasant memories of the global fallout from the collapse of Lehman Brothers. As Constantio well knows, in Italy, financial stability concerns are off the charts. So chronic and widespread are the banking sector's structural problems that there is a very real risk that bailing in one or two mid-sized banks could prompt depositors and investors to move funds from weak banks to stronger ones, including banks outside the country, accelerating liquidity, stress, and even bank runs. Even in Spain, which already restructured its banking sector years ago at a total cost to taxpayers of around 300 billion euros, including government guarantees, it didn't take long for contagion to spread after Popular's collapse. The most affected bank was Liberbank, Spain's 8th largest lender, whose shares collapsed by a third in the 3 days following the bail-in of Popular. By Monday morning, Spain's stock market regulator, the CNMV, was suddenly spooked to institute a 1-month ban on shorting the bank's shares, which, at least for now, seems to have stalled the rout. In Italy, the contagion from a banking crisis would be a lot more difficult to contain. That's the main reason why MPS, or Monte de Paschi, was given such a generous stay of execution. If Banca Popular di Vicenza and Veneto Banca are also bailed out with public funds, the message from the ECB will be resoundingly clear. Banks will not be wound down if the banking system they operate is deeply unstable. It's a whole new variant of moral hazard. As long as the banking system is in terrible shape, the bank investors will be bailed out with public money. Liberbank's stockholders and junior bondholders fear a bail-in. Of course they do. Reed is another Spanish bank about to bite the dust. I think I did that one. Matter of fact, let's hear how it sounds in this mic. Another bank bites the dust. Another bank bites the dust. Okay, I think I got one more vid to do. Take care.